Hello and welcome to another daily market update by Market Intel. We are currently on the Market Intel website. If you follow the link in the description, you can also reach this website and you can register for free to receive daily free Elliott-Wave market updates for several asset classes. For example, gold, oil, the S&P 500, the Nasdaq, cryptocurrencies and stocks. Today, we want to take a look at a stock. So we click on it. And here you can see that we have updated the T-Mobile stock recently. And this is one that I want to take a look at because we have seen a reaction to our target area, to our short trade area already that we communicated before here on the website. But we want to talk about the primary scenario and the alternative to see, okay, is the downtrend already starting or could we stretch a little higher? When you register on the website and you register for free and receive these updates, when you click on the asset classes and the assets you actually like to know about, then you can see here the written technical analysis, including probabilities for our primary and alternative scenarios, as well as the relevant support, resistance areas and targets. So let's start on the 2-day chart. We take a look at T-Mobile. 2-day chart gives you a long-term outlook. And this shows you actually the price action since, let me move that, since 2022. So this is now interesting because in our primary scenario, which we currently assign 66% probability, we can see that a third wave topped here around August 2021. And we're basically now in this fourth wave. The idea is that a flat structure is forming here in which an A wave, which is the first leg of such an ABC correction, completed basically early in 2022. Now a B wave is unfolding. It seems to be an overshooting B wave, which is unfolding here. It's a clearly corrective structure at the moment, which counts best as a so-called WXY structure, which is a more complex correction. The price recently broke above this wave W top, which is here at $154.38. That was a resistance level. The price broke above that level and is now reaching the target area that we communicated before. This is located between $161.69 and $168.80. In our primary scenario, this magenta wave Y of B should finish in this region and a downtrend should start in wave C to complete wave 4. In the primary scenario, which, as I said, we assign 66% probability, we should then see over the coming weeks and months this downtrend to follow through and actually eventually break below the $154.38 level again, which was a previous breakout point. We should break below it again, follow through, break below the X wave low in magenta at $124.92 and reach the target area, which we currently have defined between $95.72 and $116.54. This would be the C wave of wave 4. Okay, in our alternative scenario, the price would break above the B wave target area. We only give that 34% likelihood, probability. And in this scenario, wave 4 already bottomed in 2022. We are already in wave 5. But because it is a fairly clearly, it's a clearly corrective structure at the moment, at least it looks like that. The primary scenario suggests that we will get a rejection in this region and a move to the downside here in wave C of 4 should start soon. Now let's take a look at the 4-hour chart, which is our short-term chart, which gives you a little bit more detail about this move. And here you see in more detail this WXY structure in magenta. On the 4-hour chart, if we really take a look at it in more detail, it's revealed that our primary scenario suggests that we should stretch a little higher, just a little bit higher in this green target area, where the wave B should be completed, but before breaking above $168.80. So ideally, it stretches a little higher to possibly $168.80 and then gets rejected. In the alternative, the top is already in. But the move down isn't clearly convincing yet, so I would need to see further evidence to confirm that. For example, a break below $154.38. At the moment, we assign only 37% probability to a direct move down. In the primary scenario, with 63% probability, we'd like to see it stretch just a little higher. But again, it should stay below $168.80 and avoid a sustained break above that level. Which means, bottom line is, main takeaway, we should see a C wave to the downside start very shortly. Maybe it's already started, but that would need to be confirmed with a break below $154.38. It certainly tells us that there is a potential for a major turning point here, which could start a multi-month long decline. So that's our update about T-Mobile US. Hope you enjoyed the update. Feel free to follow the link in the description that takes you to our website, dailymarketupdate.com. Register for free, and then you get your daily Elliott-Wave updates for free. Thank you very much. Bye-bye.